Intel stock is up 90% this year and just hit a 52-week high of $42. So is this the start of Intel's comeback or just another rally before it crashes again? Because after 5 straight quarters of losses, Intel just reported $4.1 billion in profit, a 124% increase. And that's on top of a 200% earnings beat. Sounds incredible until you realize their data center and AI division is still shrinking. And that's the problem nobody's talking about. Everyone's hyped up about Intel's turnaround story, but I'm watching something that could decide whether Intel actually competes in the AI chip war or gets left behind. I mean, if this signal flips, Intel stock could re-rate fast. If it doesn't, this 90% run could have hit a wall. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with their money. And that's why in this video, I'm going to be breaking down Intel's latest earnings, its AI ambitions, and the truth behind the analyst targets to see if this comeback is real or is just priced for perfection. Let's get into it. Intel is a global leader in designing and manufacturing semiconductor CPUs that power technology all around the world. Intel CPUs and advanced chips are built into computers, servers, and connected devices and are used every day by consumers, businesses, governments, educational institutions. I mean, whether you're streaming Netflix, training an AI model, or running a data center, Intel is somewhere, most likely, behind the scenes making it happen. Now, beyond chip design, Intel develops advanced fabrication and packaging technologies and operates a global network of manufacturing, assembly, and testing facilities. So, as the company continues to expand, Intel is also growing its role as a third-party Foundry, and this is set to provide external customers with access to Intel's own world-class manufacturing expertise. And that shift from making its own chips to producing them for others could quietly reshape how Intel competes in the next decade. Manufacturing is central, right, to Intel's identity, combining in-house production using Intel's 7, 4, and 3 technologies with selective use of external foundries for flexibility. And not only that, its vast global network of fabrication, assembly, and testing facilities spanning the United States, Europe, and Asia provide both scale and supply resilience. So Intel isn't just a chip company, it's a logistics powerhouse that's keeping the digital world running. But here's where things start to get interesting, right? Intel designs, develops, and sells CPUs and computing solutions through 3 main business divisions: Client Computing Group, Data Center and AI, and Network and Edge. Let's focus on the second one because that's what everyone is talking about. Data Center and AI, or DCAI, powers the backbone of global digital infrastructure. It serves cloud providers, enterprises, and high-performance computing users. Intel provides optimized solutions that combine hardware and software to meet demanding workloads across cloud, AI, and enterprise environments. And with AI workloads exploding, this division could be Intel's ticket back into the spotlight if it executes. And even then, there's Intel Foundry, which integrates chip design, manufacturing, and advanced packaging all under one system. It produces both Intel's own chips and those of their own clients, and that'll strengthen the global semiconductor supply chain. Think of it as Intel betting that the world's next big chip makers will actually need Intel's own foundries to build their products. Now, anyone who spends some time doing stock and market research knows that it can be a lot of work. Thankfully, I found Moomoo as a company that can streamline my research process, and let me tell you, it's been doing wonders for me. I think the absolute best feature for Moomoo is their AI assistant. Before that, I used to cross-check every metric, value, and news item across many sources, which ate up precious time. Now, all I need to do is type in my question into the AI, and voila, everything I need is right here. from options and stock analytics, growth catalysts, technical analysis outlooks, and the entire trade process, step by step, all in one platform. It's like ChatGPT, but with full access to real-time market data, so you'll get in-depth and pinpoint analysis instead of the usual vague vanilla responses with outdated data that you'd find in other platforms. Plus, it comes with access to Morningstar reports, all for free. That alone saves you hundreds of dollars a year. And if that's not enough, new and qualified users from the US can get up to $1,000 of NVIDIA stock and up to 8.1% APY for a limited time with their cash sweep program. If that sounds good, scan this QR code or check the link in the description and see why 27 million users trust Moomoo for their everyday trading needs. But enough introduction. Let's talk about the company's stock price, because that's probably why you're here, right? Intel recently closed at $38, and recently they recorded a 52-week high of $42.48 on October 28th. Year to date, the stock is up 90% and up 45% in the last 52 weeks. That's massive, especially for a company that many investors had just written off not even a year ago. Volatility-wise, it has a 60-month beta of 1.31. This means that the stock tends to move about 31% more than the broader market during price swings, amplifying both gains and losses. So, the stock shows above average volatility, but it's not extreme. Yeah, it's the kind of beta you'd expect from a growth-oriented or a cyclical company rather than a defensive one. Regardless, timing your entry actually matters. So with the stock price recently reaching a 52-week high, investors are naturally wondering, are we seeing some momentum here, or is it just a short-term bounce? I mean, it's something that's come up in my Discord, so let's have a look. Intel released its third quarter financial results on October 23rd, and reported revenue was up 3% to $13.7 billion. Meanwhile, the company's net income increased approximately 124% to $4.1 billion, or 90 cents a share. And after 5 consecutive quarters of losses, this is a breath of fresh air and beat estimates by 200%. So you could say that Intel didn't just turn a quarter, it went, let's say, pedal to the metal, right? And contributing to this quarter's revenue was $8.5 billion from the client computing group, that's up 5% year over year. But the data center and AI segment that generated $4.1 billion was down 1% year over year. And also down 2% year over year is the Foundry unit. But it brought in $4.2 billion anyway. But that mix shows strength on the consumer side, but also softness in AI and Foundry, which is ironic, considering that's where the market wants to see the growth. Intel's current ratio is 1.6, and that tells us that the company has $1.60 of current assets for every $1 of current liabilities. So Intel's not in danger of running out of cash anytime soon, and that's huge for stability-minded investors. But what about the future? Well, management has guided fourth quarter 2025 revenue to come in between $12.8 and $13.8 billion, and a loss of 14 cents a share. So there has been improvement, but the fight to get back to annual profitability, it's still on. And that's where the tension builds, right? I mean, Intel's recovery looks promising, but we're not there yet. So that's it for Intel's financials, but in the future, I'll cover Intel again, so definitely be sure to watch out for it. But what about the stock? Is it a buy at these levels today? Well, to answer that, let's have a look at what Wall Street analysts say about Intel. Consensus among 42 analysts rate Intel stock a hold with a high target price of $52. So that suggests as much as 36% potential upside from the stock's latest closing price. And the average score has gone up in the last 3 months. Intel's third quarter demonstrated some solid progress, while strong liquidity and balanced segment performance highlight steady execution, even as management guides cautiously for the next quarter. So I read this as analysts seeing Intel as a wait and watch story. Not bad, not great, but potentially ready to surprise. But what about you? What do you think? Can Intel's comeback in AI and chip manufacturing finally turn this hold rating into a strong buy and a long-term win for investors? Let me know in the comments below. And while you're there, if you happen to find this video helpful, don't forget to like and subscribe because it'll help others find the video, it'll support the channel, and you won't miss out on my next deep dive. Well, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.